After going north of $400 in the May-June timeframe, domestic airfares could come down to an average of $286 per ticket this month. That's a 25% decrease from the peak. While they're expected to surge as we approach the holidays, they'll remain below $400 and precipitously decline as we enter 2023. Domestic traffic was up 5.2% year over year in June, but still just at 81.4% of 2019 levels. Maybe more affordable airfares will help get things back to where they were pre-pandemic. But does this make airline stock a buy? In a word, nope. As we noted, amid economic uncertainty, stick with leaders who have proven they can weather storms. Apple, Costco, and so on. Even beyond this long-term perspective, your speculative investing dollars are better spent outside of the airline industry. These companies are far more resilient than airlines, who tend to be directly tied to so much of what makes the economy uncertain and have to grapple with unpredictable energy costs. Fuel prices account for up to 30% of an airline's operating costs. They drive the top and bottom line, and they're unpredictable. Just look at this topsy-turvy chart so far in 2022. Major airlines rely on other sources of revenue to offset high fuel prices, such as selling branded credit cards. They can barely manage their core businesses. We have scant confidence they'll perfect ventures outside of their wheelhouse. Take American Airlines, for example. On the surface, American is doing well, beating earnings estimates for Q2 and expects a strong, even profitable Q3. However, even with this improvement, American's results will come in below 2019 levels. And it's not just fuel prices. If the economy heads into a recession, this will likely hurt demand during a time when a staffing shortage has forced the airline to give pilots massive raises. The bottom line is this: airlines have little, if any, room for error. As an investor, this does not breed confidence. If you really want exposure to the industry, you're probably better off taking a more broad approach via an ETF, such as the U.S. Global Jets ETF. Through Jets, you remove the guesswork of trying to pick individual stocks. An even better bet? Go even more broad. The Spider S&P Transportation ETF owns some airlines. However, it also counts FedEx, United Parcel Service, and Old Dominion Freight Line in its top 10 holdings. The top airline held by the fund? It's actually Spirit, by far 2022's top performer among big-name airlines.